Crypto investors, buckle up. Let me tell you, because whether you think the next 3 to 12 months will be a roller coaster or a rocket ship, one thing is absolutely certain. Markets don't move in straight lines. And today, we're going to break down exactly how a crypto bear market kind of could play out step by step so you could position yourself instead of panicking, which we don't like panicking on this channel. So even if you're a long-term believer, understanding bear markets is how you get the best entry points. You got to understand that there are entry points. Protect your capital, of course, and avoid getting shaken out right before the next major run, which again, we don't like happening to us. So let's get into it. First, we're going to talk about where we are exactly in the cycle. To understand where the next 3 to 12 months will kind of be, we need to zoom out, right? Historically, crypto moves in 4-year cycles. We know that. I know there's a lot of talk about that kind of cycle being dead and over with because of institutional players involved and treasuries, etc. But these cycles are tied closely to Bitcoin's halving events. And we know that for a fact. After every halving, there's usually a massive bullish expansion and then followed by a cooling off period. And then the part most investors prefer to ignore, that's the one thing of the bear market. Now, right now, many analysts believe we're somewhere between the late stage bull and early distribution, right? That messy transition where smart money starts taking risks off the table while retail investors are still feeling quite euphoric, even though the fear and greed index right now is extreme fear, which could play out to why I believe we're not in a bear market yet. So if that's true, then the next phases are extremely predictable, aren't they? Not in exact price numbers, but sort of in structure, right? So in the next 3 months, a bear market rarely starts with a crash. It usually starts with a slow, grinding loss of momentum. It's not this like one wick down and it's 80% and it's all done with, right? It's just sort of like, it's like a step stair, right? All the way just downward, right? And they build some plateau and then it continues down, etc. Might see a little bump up, but it's typically lower highs and so on and so on and so forth. We see lower highs, we see weaker bounces, and headlines stop sounding like crypto to the moon, right? And more like, is the rally losing steam? Retail loses interest, Google searches drop. As you know, you can look at the trends on Google. NFTs go quieter, trading volumes flatten, et cetera, right? It's all this sort of like sequential things of negativity or less positive, if you will. This is the time when many people feel something is wrong in the market, right? They don't want to believe it, so they hold. Some even buy dips that aren't really dips. They're the start of the trend reversal. And again, I think it's also depending on your time horizon. If your time horizon is 5 years, hey, a dip is a dip, right? If you believe it's going to 3 and 5x, Bitcoin's going to 5x in 3 years from now, then it is a dip from that time horizon, right? But if you're looking at a 6-month time horizon, no, if it's a bear market, it's going to go further down. And again, that's another buy the dip opportunity. So then comes what I call the wake-up call event, right? This kind of could happen anywhere in the next 3 to 6 months. It's usually triggered by some macro tension or industry news, right? Or it could be a black swan or something else. It's like a major exchange collapsing, right? Regulations land, inflation spikes, liquidity dries up, which is what we're seeing today. It could be reversals of that, and that's why, again, I don't believe we're yet in a bear market, despite the fact that there is a liquidity crisis. But we all do know that QT is supposed to be ending on the 1st of December. So the inverse of QT is QE. So anyhow, altcoins, let's talk about them briefly. They typically will drop anywhere from 20 to 40% in a single correction. Bitcoin loses key support, sentiment flips, and bullish, you go from bullish to being confused, right? And then this is when the classic phrase starts trending on X and Reddit. I thought this was just a correction, and everybody's freaking out because, X, Y, and Z said it's just a correction. So let's talk a little bit about what a bull trap is, right? After the first big leg down, the market often stages a strong bounce. Okay, that's typically what could be. And this bounce fools a lot of people, right? It happens in every cycle. It's fueled by hopium that, hey, perhaps we're not done yet. So influencers are shouting, "We're back," and shorts get liquidated and things like that. But this rally is usually what we call a bull trap, right? It's a temporary squeeze before a deeper downside. That doesn't mean you can't profit off of that. It might be like, for example, I say, for example, in Q4, I do believe we still have a big leg up for the rest of November and December. That could be considered a bull trap, right? And then, in fact, we do see a true bear market come in January. It's possible because many are still saying, like Tom Lee and several others, that we still have one strong leg up, and that's where we are. So, potentially, right? So what does the bull trap actually do? It gets people to pull back in. It gives the illusion that the worst is potentially over, and many buy back at higher prices than they actually originally sold. And then the market rolls over again, slowly at first, then pretty violently. This is the phase where smart money quietly continues distributing while retail chases green candles. And I don't want you to be those people. So I'm trying to at least position you to where you're aware that these things happen, especially if this is your first cycle, so that you have some sort of confidence in, hey, wait a minute, I saw that video and this is what it's starting to look like. And so once this trap fizzles out, once the bull trap fizzles out, the real bear market starts, and that's typically between 6 to 12 months into the downturn, right? And this is where we see long periods of sideways chop, lower lows, volatility reduction, liquidity vanishing, altcoins bleeding out slowly as far as 90% or 95% in some cases, even 99% in cases of especially meme coins. This phase really feels boring. It's depressing to a lot of people who held all the way up and down. It's your friend here has done that before, and this is why I guess my own experience, I can sort of speak to this and say yours truly has been through something like this, and this is where generational buying opportunities are actually created. So do not look at bear market as being your enemy, because if you have a longer time horizon, that's good for you. And this is why I tell people, if you're going to be a refined investor, you have to understand the potential of holding for an extended period of time. So, and this is really what I want to talk about. Understand that generational success, generational wealth, and buying opportunities don't happen in these bull traps, right? In these hopium moments. They actually happen they don't happen during crashes or hypes or anything. They happen during these bear markets where most are so scared of getting involved that you're the ones like, wait a minute, I get this. I've been through this, or I've heard about this, and this is when I should be getting in the game, right? And growing my position at these lower positions where everyone else is, especially retail, is scared. You got to play along among the institutional buyers and the treasury companies that understand when is the right time to actually get involved. So what could push us into the scenario in the next 3 to 12 months? A few possible catalysts, right? Macro tightening. That's interest rates staying higher longer than expected. We know that rate cuts are supposed to be coming. Unfortunately, the Fed is a little bit divided at this point as to whether or not even December will happen. Regulatory pressure, especially on the U.S. exchanges or stablecoins, even though thankfully we have a favorable SEC now, which we believe will really help drive the crypto regulation in the United States, especially with Clarity Act, currently on the table, and so many great things happening within the United States that could potentially help alleviate the possibility of a bear market, at least any time in the short term, and could perhaps create what many are talking about, which is that super cycle, or what I referred to one time as a perpetual cycle, where we don't really have a bear market anymore. It's more just a 30-day drop as we've seen between October and now. And then all of a sudden, just markets pick up. Of course, there are things that could potentially stop that from happening, such as geopolitical uncertainty, right? A huge black swan, another war, could potentially really drag us all down and cause everything to melt. And then we need to be prepared for that as well. And so all of these things are sort of like things for us to consider at the very least and keep our eyes open for. Each of these don't necessarily mean that it's catastrophic on their own, but perhaps collectively could lead to something pretty aggressive, similar to what we saw in 2022 with, FTX collapse and just, Luna and so many things happening all at the same time. But it was just like, okay, the market just can't bear this news anymore. So At the tail end of the bear, there's often one final flush, a big, what they call capitulation event. This is where extreme fear peaks, right? Where people who swore they'd never sell finally sell, where timelines are full of crypto is dead posts. Historically, this is almost exactly where the bottom forms, and you'll feel it, you'll sense it, but it doesn't matter if you time it exactly right. If you're in the long-term vision kind of camp, then you know very well that as you go down, especially once you hit that 30 and 40% mark, down from the previous highs, which is kind of where we are now, you could potentially start thinking of dollar cost averaging back in to the market, because perhaps you felt like you never accumulated enough Bitcoin, or you never got a good position in Ethereum or XRP. What better time is there? It's like a second opportunity. It's a second chance in life, right? To create that generational wealth that you didn't maybe perhaps have enough liquidity at the time to accomplish. The key isn't predicting the exact timing. It's understanding the structure so you can prepare yourself for those DCAs to coming back into the market. So as an investor, what you do? If the bear market doesn't fold, well, don't chase hype. Don't panic sell the bottoms. Build cash reserves, because it's that cash that's going to get you into getting in those lower investment opportunities. Dollar cost averaging, as I mentioned, and focus on long-term fundamentals, guys. It's really not about short-term noise. Think about each of their utility. Bitcoin, digital gold. I talked about this in the previous video. Ethereum, developing apps, stable coins, things are being built on Ethereum. Wall Street adopting on Ethereum. XRP, settling international funds across banks across the globe. These are things that are actually taking place as we speak, and this is what you should be focusing on when you make the decision. And so